Welcome back to another episode of the Pure Property Podcast. Myself and Matt today are just going to be giving a brief, mid-year property market update, especially as, one of the most recent episodes we did, we were talking about, who's going to get in, Labour or Conservatives.
And we do know now, don't we?
Yeah, now we know obviously Labour are in. So, but not just that anyway, because we've covered a lot of what they're looking to do in that episode, but also just talking about, the market in general. So yeah, we'll get on, hopefully give some insight to how the market's performing, and hopefully, any investors or even people looking to maybe purchase a home for themselves listening to this can get some, value out of it. Now, I think one of the main things to focus on, because everyone says, what's going on with the market right this second? Elections just happened. What's happening? And I think realistically, it hasn't really changed. I mean, fairly still common theme of being a subdued market to a degree across the board as a whole. Now, we do know in other areas where, we source property investments for our investors, in like the Northwest and in Yorkshire and those places, those property markets, the little pockets are doing well. But overall, it's pretty much, pretty steady. Would you agree?
Yeah, I think as you said there, Toby, I think we've had a lot of questions, even from investors as well, as of recent, saying, look, should I wait, see what happens with this new change in government, etc. So, but I think in terms of overall, it comes down to, once again, your strategy, what you're looking to do. I know obviously one of your favourite terms is buy property and wait, right? Or the other way around.
Don't wait to buy property and wait.
Beautiful.
There you go.
So, and I would say you're still very set on those sayings, yeah?
Yeah. I mean, I'm still in the market looking for property investments.
Yeah.
As I said, it's all about how you manoeuvre the market conditions you're dealing with at the time. You can buy in any market. It's just buying correctly in those market conditions. So yeah, nothing phases me in that. I think what's quite interesting actually is The Guardian had a stat where they were saying property, house sales are up 15% year on year from 2023. So what that shows is there's actually more activity in the market now. Some people will say, well, if there's more activity, why aren't prices shooting through the roof? Now, there are some other bits of data which would obviously answer that question, and that's, well, there's more stock on the market now. We saw more stock come on. So, that balances out, and that's why we're seeing a steady sort of price inflation in most locations. And we have to remember the average at the moment on Home Track, I think they've got price inflation at just like zero, so it's just flat at the moment now. But that's the whole of the UK. We know in like the likes of Manchester, etc., they're in positive territory for house price growth. But yeah, the extra activity in house sales is counterbalanced by a little bit more stock, which is quite interesting to see. But yeah, overall, I think it's a fairly decent market, and I'd probably say it's a market right now I'd want to be trying to get into as we speak, because inflation today is held as it is. So Bank of England aren't going to be cutting the rates just yet, it would seem, but a lot of forecasters have said all along it's going to be towards the end of the year potentially.
Even mortgage brokers, a lot of the brokers saying that it should potentially go down that way, which I think as well, I know we've spoken about it before in terms of that then may cause property prices to go up due to the fact of a lot more people will come back into the market knowing that the rates are potentially lower. I agree. I think it's generally a really good time to be buying, especially, as we said, in some of the areas that you highlighted before, your Northwest, your Yorkshire and Humber areas, even the Northeast and some parts of the Midlands, etc. as well. So I think, if you're buying in the right places, it's an excellent time to buy right now.
I think we're on the cusp of a base rate cut, and once that happens, I think there'll be a bit more confidence come in the market. People's affordability levels are naturally going to arise. I'm not saying mortgage rates are going to shoot down by then, but as that base rate filters through into the market, you probably will see more competitive mortgage products and rates come into the market. And once you start to build that momentum and confidence in the market, that naturally attracts people who are sitting on the sidelines now, waiting out, or maybe just weren't ready at a certain point, suddenly enter the market. More competition just means you're not getting the best pick of the deals, the properties, and that usually tends to mean you'll see, prices go up. So that's why we've said for the last few months, and probably for the year, it's still a good time, and I would probably say the signs are indicating it's a very good time to get in. You can wait for it to get better if you want to feel more confident and comfortable in investing and buying at that point. If you see the market's a bit more better, a better market, of course you're going to feel more comfortable entering at that stage. But if you want to get in before that happens and get the best deals,
we know a lot of people that have always been saying, "Oh, I'm going to wait until the perfect time."
But I'm going to wait to see who gets into government. Now government's in. Well, I'm going to wait to see what they're going to do.
Same thing with Brexit and COVID as well, right?
Yeah,
just waiting to see what happens after a couple of months, and then you don't end up buying, and it's missed opportunities. So I think that's what you highlighted when we had a conversation earlier, actually off camera, was the fact of, you look at what the property market over the past couple of years has had to kind of take on and deal with, and it's always come out very much so on top, and if anything, in a very positive way, which surprised the hell of a lot of people that were saying crashes. And it's the same thing now. I think there's a few people that are very sceptical about Labour coming in as well, which I think, as we mentioned as well beforehand, about having the option of, look, they're going to want to make a positive impact in the property market. So we generally do see it right now as a positive, and overall, with the forecast of Savills releasing the data as of recent, which I know we spoke about on the previous episode as well, in the right areas, I think it's an absolute great time to buy.
Yeah, I mean, look, speaking of government, Labour being that now, one of their aims and one of the big things in their manifesto was, get Britain building, in terms of they want to build in their government time span 1.5 million homes. Now, what does that mean for the property market? I think, because that's a question I've had very, very recently. One of my responses to someone who mentioned this to me was, well, they've got to build the 1.5 million homes first. And most governments come in and say they're going to do, a massive job in building more properties, but it never really happens. So I think first things first, let's see if they actually build them. But realistically, what happens if they do build them? I don't think much. It'll bring more homes into the market, but you have to remember they'll be staggered over a number of years. They're not just going to build 1.5 million homes overnight, although that's what's needed. So I think what it would do is bring a steady flow of opportunities into the market, because more properties means more options for investors and purchasers to buy properties. I think you'll have more quality stock coming into the market, which is good for not only people purchasing these properties, whether to live in themselves or as investment, but then, if they are investment purchases, that's good news for tenants. They'll be getting nice, new, efficient homes, much sort of better standard, you would hope. So I think you'll have more quality coming to the market, and I do think there'll be a spreading out of where these homes will be built. So when I speak about opportunities, also location wise, the different locations, different areas, which then are opening up to investors and landlords to buy properties to then rent out and see good favourable returns. So I think you'll see a bit of a spread out of that. But in terms of what it really means for the market, until they build them, we don't know. But as it'll be staggered, I think it'll just help keep the property market steady and flowing nicely, which is what's needed. When we have these big peaks and troughs, it's because there's supply and demand issues. There's lots of factors going in, inconsistencies, hence the peaks and troughs. Whereas if you're building nice steady flow of homes, it's going to bring some nice consistency to the market, which then tends to bring consistency to property prices as well.
Yeah, absolutely. I think it'll be, as you said, I think it's hard to judge now, isn't it, to see what's going to be happening. But off the face of it, I think, it will be more so the steady side of things that we'd see. I think they're going to want to make too many changes which could impact the market massively.
Yeah, and I've got some data here from the latest Home Track report. for the property market. So, as I mentioned earlier, house price inflation, so property prices, they were just flat at 0% in May 2024, which they've actually been in a slight negative up until then. So you can see the property market's on an upward trend. So, when do you want to jump in? Do you want to jump in when it goes straight up into the trajectory, or do you want to jump in now just before that starts to sort of continue where it's going, potentially? So they're also forecasting UK house prices are on track to be 1.5% increase over this year. So that is the UK average as a whole. That will be brought down by the southeast, London, those locations where it's more of a struggle in terms of property price growth. But, these other places like Manchester's northwest, Liverpool, Yorkshire, Leeds, Halifax, these sort of locations, they are doing a lot better. So if that's 1.5% for the whole of the UK, you're going to see a higher figure for them. So just do bear that in mind, which is good. I mean, I can't remember how that fits in with our predictions for the year, but obviously we can.
Yeah, I have to check on that.
Yeah, at the end of the year we'll be revisiting our predictions for the year, so that'd be quite interesting. UK house prices are currently 8% overvalued, but will be fairly valued by the end of the year due to rising incomes. So, what that means is property prices going on the market. They're usually the estate agents are putting them on the market at a certain price. So this is, by the way, this is for like properties you'll see on Rightmove, Zoopla, not the sort of properties we deal with.
Yeah.
That will be off market, direct to developer, etc. But yeah, so they'll go on the market, and the reason they're perceived as overvalued, because it's quoted in the report, is because people's income can't afford it just at the moment. With the mortgage rates, the base rate in general, inflation, all that cost of living, all that stuff. But so what they're pretty much saying is, by the end of the year, we're going to see incomes rising because the inflation is steadying. That means people will then have more money to buy, and the prices that you're seeing today will, by the end of the year, be more affordable for people. So they won't be overvalued anymore. So that's when you'll see, as I've mentioned previously and earlier, is you'll see the momentum start to come back into the market. So that's good. And a very positive stat for the property market is house prices have risen across all regions in the last 3 months.
It's really good to hear.
Yeah.
Across the board.
Exactly that. An annual rate of house price growth remains negative across southern England, but is rising elsewhere, which we knew anyway. I mean, we're based in the south. We see what's going on in the market. That's no real surprise. As we mentioned, affordability being an issue there.
Yeah, we always talk about kind of the affordability levels and all of that happening, which I think we've seen where a lot of money's being spent in the UK at the moment, haven't we, in terms of regeneration areas, transport, kind of government-backed schemes and other parts of funding, etc. So, yeah, I think in terms of that, I generally would say it's an excellent time to be looking in the market.
So how would you summarise the market then, as this is a mid-year update?
I would say it's just very steady at the moment. This is what we want. I don't think you want a market that's too up and down all the time. We've got a fairly steady market with the UK, haven't we? We've had a lot chucked over the last couple of years, as we mentioned. I think if anything, it stayed very much so on track and very solid throughout. Of course, that we're always going to have challenges or hurdles, as I know you like to sometimes say, in the market, but generally, I think for all that's happened, I think it's a very solid and positive market at this stage. What would you say?
Yeah, agreed. Nice steady market. I think it's an easy one to navigate at the moment because of its steadiness. And I would say I do think it's going to improve.
Yeah, I do as well.
The data is there. It's all pointing to that towards the end of the year. So as we mentioned, it could potentially be a very good time to get in now before it improves even more.
I think so.
And yeah, I just think it's a good solid market at this moment in time, level, steady, easy to navigate. I think coming back to your point on, what the market's had thrown at it in the last few years, I like to use the point of view of, in 10 years' time, if you look back on the last 4 years, for example, and you can see a list of everything that's gone on, in the country, in the world,
Which has been a lot.
Pandemic. You've had a war. You've had in the UK. You've had multiple prime ministers change of government. All that going on. And you said, what do you reckon the property market did then? They'd be like, you must have fallen off a cliff. But when you look at the data of what the property market did, the prices at the start of 2020 compared to where they are now, people would be like, how is that even possible? But
you'd be kicking yourself if you didn't buy in at that time, wouldn't you?
Yeah. And that just shows how robust the UK property market is. Doesn't mean that there may not be other scenarios where, like we saw with the financial crash, for example, it can be dented. But in the last 4 years, as you've mentioned recently, in terms of a client wanting to see what Labour are going to do. I mean, look, if the property market hasn't been put down the edge of a cliff through all of that going on, I don't think Labour coming in is going to do anything that bad, in all honesty. And like we know, it usually does tend to have an initial positive effect just as a bit of a byproduct anyway of them coming into the market. So, yeah, it's interesting when you hear people have that mindset.
I think as well, it's some of those things that I think when you look into things and we see such a big, I guess, push from overseas investors looking at the UK markets, that's a positive. Like, you'd be looking at that in itself and thinking, well, something must be right happening here. If people are taking money and funds out of their own countries to then want to get into the UK market, they're not going to be doing that if they don't know if it's a stable market. You know what I mean?
Yeah.
I know a lot of investors overseas that I personally have dealt with, and I know that some of the team have dealt with that. Yeah, they really want to get into the UK market. They know it's obviously got that little bit more stability compared to maybe where the likes of they are, wherever they be. So, yeah, I think that's also something that's quite a positive to look into, that it's not just UK investors, that we do have a big element of overseas investors in the UK market as well that are really trusting and love the UK market.
Yeah. Okay. Well, I hope that's an insight into our mid-year market review, and it's been helpful. And as ever, if you have any questions, want to discuss anything we've spoken about on the podcast, do get in touch and we'll be happy to help. But thanks for joining us, and we'll see you on the next one. Bye-bye.